over the last month with the banking crisis, we've actually seen risk off be a positive for Bitcoin. So this kind of a weird thing where Bitcoin, people aren't sure, wait, which one is it? Is it a risk on asset or risk off asset? And right now the price action is telling us it doesn't know, right? The biggest thing to do here is look at the chart. And I think the chart really tells us a lot about where Bitcoin is relative to where it could go. So if I zoom out on my chart here, and this is amazing, we're going back to the levels that were the lows during the bull market. And that's where Bitcoin is hovering just underneath.
In today's video, Chief Market Strategist Gareth Soloway analyzes the charts of Bitcoin, gold, S&P, and US dollar, discussing potential breakouts, resistance levels, and trade opportunities. Soloway dived deep into the world of finance and analyzed why the Fed cannot cut rates and its impact on the stock and gold markets. We will look at 4 charts today that are showing potential breakouts. He discusses how resistance levels can pose a significant obstacle and explains why there is a chance that the price of Bitcoin will drop again if it is unable to break out of its current range.
And so if you think about it on a psychological basis, this is like the Great Wall of China. I mean, this is the epic wall of Bitcoin's price action. And so that explains a lot why it's having so much trouble breaking above this $30,000 level. So for me, when I look at this, I stay bearish or a suspect in terms of whether or not the bull market is back on in Bitcoin. I'm still favoring the fact that we're still in a bear market in Bitcoin until we get over 30,000 and hold above it. Because right now, this is the line in the sand. And if Bitcoin can't get through this, it's still bear market central. So if we did get above 30,000 and we stay there for, let's say, a week or so and establish ourselves back above that level, I think at that point, then I say, okay, listen, we're back above the psychological lows from the bull market of 2021. Now I think the low is in. But as of now, to me, this is a run-of-your-mill bear market rally. If you go back to 2018, 2019, we had periods where we were up 100 to 200% off of the lows in Bitcoin, and yet we still came down and retested that 3,500-ish low. So you can't get too excited yet when the technical level that is the huge wall in Bitcoin hasn't been broken yet. So I'm sticking with 12 to 13,000 and maybe as low as 9,000 as of now. So if we get above 30,000, and I think this is key, is that a break above for a day or two, that doesn't matter to me. If we stay above there for a significant amount of time, a week or so, then likely that tells us that we are going to head even higher. Your next leg probably has the chance to take us up towards that 35, 40,000 level probably over the next month or so. So we have this chart here, which is that Bitcoin chart, and you can see how, again, in general, it does follow the gold chart in general here, and then also the S&P chart. So everything's kind of, again, which is weird, right? But in theory, you would see gold going opposite to what the S&P is, but that's not necessarily the case here. Same thing with Bitcoin. Gold and Bitcoin are going relatively together. So 2022 saw the miners actually lagging gold. They were down huge amounts. And the reason why they were down was because you had inflation that was really high, but gold price wasn't keeping up. So they were really suffering. Their input costs essentially were skyrocketing, while what they were getting out was not going up in equal amounts. Now you have a scenario where inflation's coming down, and gold price is actually going up. That's the best scenario for mining stocks. So I think like a GDX, GDXJ, those are going to be the recipients of massive upside, even compared to gold's move. You can see is if we zoom in on this, is you may have just had a breakdown in the dollar. So again, if a breakdown in the dollar comes, number one, that's going to continue to be very, very good for gold. In theory, it should be good for the stock market, but I would just caution people that there will be a point where a down dollar is actually not a good thing for the U.S. stock market. And that point will be when people know a recession is coming, right? So when we're in the midst of a recession or getting into one, a down dollar actually, in other words, bad news is going to be bad news. Up until now, bad news is good news because it means the Fed hikes less. Right. But eventually bad news will be bad news. But the bottom line is a down dollar is very good for gold, and generally it's good for Bitcoin as well. The Fed cannot cut rates. There's this lot of hype out there, people hoping and praying that the Fed will cut rates. It is not going to happen. Jerome Powell has said that to the nth degree, that he is not going to cut rates because he doesn't want to repeat what Paul Volcker did in the 80s, where he cut rates too quickly and inflation roared back exponentially fast. Guys, the bottom line is you're starting to see the futures actually weaken a little bit on that slightly worse than expected jobs number. Now we'll see what the jobs number is in the coming days for the non-farm payrolls report, but the bottom line is we're looking at, I think, a starting switch point where bad news means recession. And the recession is even worse this time because the Fed cannot cut rates and print money as aggressively as before. Let's get right into the charts. Here's the S&P 500 chart. Take a look, guys. And again, on the S&P 500, look at yesterday's high, right into a down sloping trend line. I love this stuff, guys. Again, this is what brings me into you guys every single day. Take a look at this. When we look right there, we look right here, and then look at this pivot point right there. Does it make sense that the markets opened higher on Tuesday yesterday and pulled back? The answer is, just from this chart, absolutely. The markets ran almost vertically into a brick wall, this trend line being a brick wall. Now remember, when you run into resistance, the general prognosis is a pullback. The question is, after you pull back, do you break out or do you break back down? All right, so there's two possibilities here. One is we consolidate in a bull flag where we start to do sideways consolidation. And this is really key, guys. A bull flag is noted by a 90 to 45 degree angle. Let me zoom in on myself because I want to show you guys this. All right, again, a bull flag is a general vertical move. Bull flag starts with the consolidation. It's either 90 degrees or it can be a slope of 45. Anywhere between 90 and 45 degrees, that is okay for a bull flag. That's what we're looking for here. Do we get that bull flag consolidation pattern, or do we just see a sharp pullback? In my personal opinion, I think the markets are very close to a major pivot. I've done calculations. I've looked at cycles. We're very, very close. Going into next week, we may see a sharp turn lower in the S&P 500. Gold staging another up move today. This is real-time action on gold right here. Another green candle. Look at the flag pattern breakout, guys. Again, flag. Look at that pretty flag. Here's your flag pole. And this is what I talk about in flags, right? So look at the angles of this. It's a sideways consolidation that's generally 45 to 90 degrees. And again, it forms this sideways chop. That's consolidation or digestion of the recent up move. That's very, very bullish. Notice how it happened above this down sloping trend line. Pivot high right here, right? Pivot high right here. And then here we broke out, we retraced, we consolidated, now we're breaking out. Where's your short-term target? Right up here. So you're looking at 2075, 2080 double top. It actually would be a triple top. How much of a pullback would we expect on gold at the double, the triple top? Let me just go to this. All right, so here's your double top right up here. And let's say we go straight up there. The essence of the pullback should bring us back to that former pivot high and consolidation. So you would put a line here in at around 1960. And if we hit this level, let me draw a trend line here so you guys get this. So if we go up here, you should get a pullback here to about this 1960-65 level. You also have the down sloping line, but less likely will go there. The bottom line is we recheck back to this pivot high, all this consolidation, and that becomes your buying opportunity for the next leg up. Off to the races we go. I am now isolating down about a $2,300 price target on gold by year end. I think, again, I've showed you guys this in the past, and I think it's remarkable. But if you go to the 1970s, you had a 9x on gold from the lows of the consolidation. Now, we're not going to do 19x. Let's not get fooled by that. All right, 9x was in a world without Bitcoin, without a lot of alternatives for investments. Do I think we can do a 3x? Yes. Do I think we're going north of 5,000 over the next couple years? I absolutely do on gold.